move back and talk about the mutual fund data. Sunil Subramaniam, MD and CEO of Sundaram Mutual Fund, is also with us to really analyze this data. Sunil, thanks for joining us. It's over 20,000 crores, well above that figure, so very, very solid number coming in. But you know, a large chunk of this is NFOs, and I'm seeing a lot of interest in the sectoral funds. Of course, we had a lot, a lot of new NFOs in the IT space, particularly the likes of Bandhan, Axis, all have come out in this space. And I understand, of course, if you want to launch a new fund, you have to look at a thematic or sectoral funds because the others are pretty much done. Do you think a bulk of this money is going to continue to come in through this avenue?
So it all depends. So I think the avenues for existing AMCs is narrowing because you have IT, pharma, banking, just a few sectoral funds that you can do, right? Even that space will get filled up. But on the other hand, you've had a lot of new AMCs getting approval, right? You had a Helios Capital has got approved. You've had recently White Oak get approved. So these new Samco AMCs got approved. So these have not yet filled out their basket. So I will say that it's not just sectoral funds. They will be launching flexi-cap, multi-cap and those categories. But to answer your question in terms of the inflows, even last month NFOs were around the same period. It's not just a spike. I think it was 6,700 versus 7,500 this month. So NFOs are, around 6 to 7,000 crores per month. And that
no, Sunil, I'm not saying it's a phenomenon of this month. I know that it's been very solid and huge NFO action the past several months because there's so much retail interest anyway in the market. So I'm saying that for the coming few months also, do you think AMC is in a bid to sort of take advantage of this? Will be launching a lot of NFOs? Because we do know a lot of money does come in through this.
No, I'll tell you the other reason for that is that clearly the market's gone to risk-on mode. So even within the diversified categories, see small caps and mid caps, their flows are increasing. So customers and distributors are clearly willing to take that incremental risk on equities in the market now. I think NFOs, because they're sectoral plays, right, they help you to refine that risk even more. So if somebody feels, for example, that IT sector has been down for some time now, is undervalued, it's a good time to enter, then between a combination between the AMC and the distributor and the customer, there is a feeling that this could succeed, they'll launch it. So I think it's clear a good sign of positivity on the Indian economy, where the whole action is now shifting to what do you think can deliver a better wealth creation for me, right? So it first went down from large caps to mid caps to small caps. Now it's going into sectors. And this, for some months to come, I think it will be there because you will see that between sectors, the valuations are very different. For example, IT is at a reasonable valuation. I would say consumption is at a reasonable valuation, whereas infra, as you know, has got a lot of inflows. Probably the valuations are a bit rich. So the intersectoral difference in valuation means that there are pockets where HNI investors and distributors feel that it's good to deploy money. So it's just I think a risk on in the market has gone up. And that's why if you see, compared to, say, balanced advantage funds, which were the flavor earlier, clearly the leadership has shifted to small cap, mid cap and sectoral funds.
Oh, yes, absolutely. It has. Sunil, hi. Good morning. So what's the takeaway? Clearly, investors are not perturbed with the markets being where they are. Clearly, there's more appetite because the overall equity number, I mean, that's the big headline, right? We're back at 20,000 crores plus, and that's quite an achievement. So what's the sense going forward? And one also sees that the hybrid category has been, even last month, hybrids were getting more funds because I think that's become the more tax-friendly category now after the debt tax changes. Correct me if I'm wrong, but going forward, what trends do you forecast?
That's a very good observation by you, Subhi, because what happened is that the multi-asset funds, which are in the hybrid funds, has suddenly become very attractive because, your debt funds have lost the indexation taxation benefit. Now, you have equity-oriented hybrids like, say, an equity savings or a balance advantage, where you do take a certain amount of debt, but you're getting equity taxation, but you're getting equity risk. So what's happened now is that suddenly there is this category called multi-asset where, indexation is still applicable if you have 35% equity. So these multi-asset funds are going to anchor themselves around 35% equity and give a debt-like exposure with indexation, which was there earlier before the laws changed. So I think I'll see a shift from debt funds into this multi-asset category increasingly as a tax-efficient play. And the beauty of multi-asset funds is that they also give you an exposure to gold, silver and other commodities. So you're effectively getting a multiple eggs into your basket, which can deliver at various points in time. And hence the replacement of the erstwhile individual fixed income market, which was partly driven by the tax benefits of indexation, is going to shift into this multi-asset category. So that's a category that I see growing very fast in the coming months.
Sunil, unfortunately out of time, but thank you very much for your insights. Get into a break. We'll come back with more.